Hi, this is Zach with the weekend edition of the Bulletin Board Heroes here at Zach's Traders Cafe for Saturday, the 1st of March. Starting off with the FTSE 100, which looks practically bomb-proof, which is rather ironic given the state of geopolitics at the moment. But we've had blue candles for much of the week and also just approaching the record high level, the intraday peak, 88.20. And basically, while we're above the top of the mid-channel there, 87.50, looking for a pretty direct run towards 9,000 plus. We were looking for that by the end of this month, and we may actually get that. We're helped along by the RSI rebound above neutral 50, which tends to be leading indicator on the upside. At this stage, only back below that uptrend line from last month, or rather from January. 86.60 would really delay the upside scenario. 50 and 200-day lines both rising at the moment as well, after the golden cross that we had at the end of last month. Moving on to the DAX, which has managed to negotiate all the political turmoil and trauma in Germany. We managed to bounce off the floor of the second gap higher earlier this month, and above that 22,200. Looking with the top of the channel there, as high as 23,300 by the end of this month. Ideally, we stay within the channel and above 22,000. Moving on to the Dow, which has been the weak link amongst the big three indices that we look at, but decent end to the week, even with the Zelensky affair in the White House. The market bounced above the floor of that rising trend channel from this time last year and above the top of the gap there from January. That tends to be a very strong signal, 42,900. And above that, looking for not only 45,000, but as high as 46,800 by the end of this month. But cautious, I suppose you want to see this market get back on the right side of 44,000 previous February support before assuming we are back on our way. And you would also wait for the RSI to get above neutral 50 versus just under 48 at the moment. Market, which is probably the highlight market of the week, not in a good way though, is Bitcoin at the moment, with the rug pull that we had after hacking news, etc. Managed to get back below the 200-day moving average. We had a potential support area at 85,000, then the 200-day line 81,800, but we overshot that. It would obviously not be Bitcoin if it went just below the big round number there, which was 80,000. But at least while we're above last week's support, 78,000. Looking for this market to rally back towards the 9,000 area, which was the neckline support, and also the broken channel, uptrend channel there from back in April last year. But not expecting anything on a sustained basis back below 80,000, given the pullback that we've already had. Moving along to gold, and here there's also been a rug pull. Maybe it's because World War III doesn't look as imminent as it did, but the neckline support there around 28.90. Below that, we have the risk of retesting 2800, the October peak, and the 50-day line now at 27.89, but not expecting anything lower than the 50-day line at this stage, even though the RSI has fallen back below the neutral 50 level to stand at 45. Moving on to the stocks, and a stock which I was hoping I would never have to look at again. I suppose I don't actually have to look at it now, but we've got a rising trend channel base here at Amigo, and managed to close the week above the 50-day moving average at 0.42. Top of the range is at 0.7, I suppose, given the lay of the land and the fundamentals of this company, where it could be gone at any second or any minute, then the top of the range is probably the most conservative place to look for. Ideally, we stay above that rising 200-day line at 0.38 if we are genuinely in a recovery situation. I looked at Beowulf back in December on the basis of potential recovery here. I've seen some of the explorers actually recover over the recent past. First Class Metals, I suppose, the best example. But we had bullish divergence there at the end of December, just before Christmas. That gave us a potential target there around 16 pence, but we've broken that target at above 16. Now looking for the top of the triangle there from back in July last year, as high as 32 pence. By the end of this month, you can see that we've had a step progression off the low, so sideways then up, sideways then up. And the last three candles actually have all been opening at the high, at the low, and closing at the high. So somebody seems to be quite keen on that particular situation. Ideally, now we stay on the right side of post-November resistance at 19 pence, ahead of 32 pence. Block Energy is also back, or appears to be back. As we've highlighted before, we had a gap close buy signal at 0.8, and we were looking for rather optimistic sounding target at 1.23, which should be done later this month, especially while we remain above the 200-day line at 0.9 pence. The trigger for the turnaround, as well as the gap close, was the gap close, or the second gap close was the first one there at the turn of the month, and the way that we've had two bounces or three bounces off RSI 50, and the 50-day line is also rising at the moment. So that looks like a genuine and sustainable move to the upside. On to Iomart, which I wasn't going to look at, but then I realized that it has one of our favorite setups, which is the Bear Trap Island reversal. So impossible to resist, gapping down back at the beginning of the month and then gapping up last week. And that scenario suggests that at least while we're above the 40 pence level, which is neckline resistance, looking for the shares to fill the gap up to 60 pence. Best case scenario here would be a move up to 85 pence, maybe by the end of next month, although that seems pie in the sky given the recent performance of the shares. But let's see if the charting setup will deliver the goods. I sheepishly looked at Itim on Thursday, and it looks as though the shares are delivering the goods. We had rising 50 and 200-day lines there. 65 pence the initial target, £1 by the end of next month. Another ambitious looking target, but does seem that the shares are on their way at the moment, if only to the mid-60s. Cupboard met one from almost the low, actually, here, and here we had the feeling that the bearish divergence would turn the shares around the 0.25, 0.3 pence area. The initial target there was up towards 0.4, which has been duly achieved, and we've actually gapped up on Friday. Above the 50-day line at 0.37, we're looking for up to 0.65 pence. I suppose we're also remembering that the company is well cashed up now, so has a bit of wiggle room in terms of what it would like to do. But the key here is staying above that 50-day moving average. Another stock perhaps in the Amigo camp is Mirriad Advertising, but here we do have that rising trend channel base. We have a rising 50-day line, and we've had RSI support above neutral 50. This looks like a bull flag, looking for a breakout towards 0.42 pence by the end of this month, while we remain above a recent support just below 0.25 pence. On to Strategic Minerals, which I believe is a profitable, or at least producing company, which is rather rare in the space, and I suppose underappreciated as well. But rising trend channel there from back in May 2023. Obviously, this is not a quick situation, but the breakout through 0.25 gives us the impression we could easily head up to 0.4 pence on the top of that channel by the end of this month, rather. 50 and 200-day moving averages both rising as well, so that gives us extra apparent into momentum for that situation. On to Trellus, which had its big spike, which I think we got on the back of, or at least identified at the time. But here, after flushing everybody out from 5 pence and going down to below 2 pence, we had a ricochet off the 50-day moving average, 1.8 pence, and a bounce off RSI 50. So on that basis, assuming that we'll break 3 pence and head up to 5 pence as a retest later this month. Ideally, we stay on the right side of at least 2 pence. Onto a stock which has been was identified in the model portfolio, which I've started doing, just trying to pick out the best of the best in terms of the charting setup. This was Upland was one of those at 1.47 a couple of weeks back. It took a little while to get going, but we've managed to clear the 200-day line at 1.6 pence. The initial target here was around a penny and a half after the breakout through 1.2 pence, and the second target here, 2.2 pence. It may be worth noting some wise person on Twitter on Friday said this is not a stock you want to be out of over the weekend, and for a change that might actually be right given the way that the shares opened at the low, close at the high on Friday. It looks as though somebody is expecting something, and of course the shares have risen with no news. Moving on to a stock which I haven't looked at for ages, which is Virgin Wines, and with its very witty ticker code. Here we've had a gap close buy signal and an end of day close above the 200-day line for the first time since September. suggests that something may be going on. We also had an RSI 50 rebound as well. And the view here is that while we're above recent support at 36 pence, looking for as much as 54 pence by the end of next month. Perhaps the Labour government is driving people to drink, and that's helping the company along. Moving on to Westminster Group, where there's also a feeling here that somebody is buying, deliberately rather, into the situation, feeling that something good is going to happen. That's said on the basis of the very strong price action on Friday. We opened at the low, closed at the high, and broke recent resistance at 1.25. Above the above 1.2 pence at least mid-price. We're looking for the top of that falling trend channel. 1.175 pence, backed by the uptrend line in the RSI window, which is a bullish divergence situation. On to the last two. The first one is Zoo Digital, another stock which I wasn't really thinking of looking at because it's been an absolute car crash over the recent past. But as is sometimes the case, the opportunity comes from a technical setup. We gapped down earlier this month, and we gapped up on Friday. Once again, those strong candles opening at the low, closing at the high in 2 sessions, and gapping up on Friday. That's a bear trap island reversal, meaning that we're looking for 25 pence by the end of this month, which obviously would be quite a result. Stock which has been championed here quite a lot is Zanaga. It's obviously championed itself with the rise from December below 4 pence. Here you can see that we've got a rising trend channel, top of the channel there at 15 pence, and the break of that resistance line there from back in January, above that at 8.5. We're looking for 15 pence by the end of this month. Again, strong into the week. Who buys with that amount of keenness on a Friday, and opening at the low, closing at the high. Double RSI rebound at neutral 50 as well, so this looks like a decent situation. That's it from me today. More updates during the week.